Let's have a look. I'm just loading this up right now. And any minute now it'll be ready. Let's go, let's go, let's go. All right, cool. We ready. So we should be recording. You should have got a little notification on your screen that we are recording. All right. So this is going to be a, basic, very basic overview, understanding, explanation of what is happening in these markets and why. Okay. What is happening in these markets and why. This is what this is going to be about. Okay. So first and foremost, I'm pretending that my uncle Lenny is asking me and saying to me, Jay, what is happening here and what are you doing? I'll say that I'm using TradingView. TradingView is a platform that understands and plots data. That data is price over here on this axis over time. For all charts, it's price over time. Doesn't matter what it is price over time. So therefore, this is Euro USD, but this trading view could be for anything. Could be stocks, i.e. your Apples, your Nvidias, your Teslas. It could be funds. It could be futures, your gold, your wheat, your cocoa. It could be crypto, your Doge, your Bitcoin, your Ethereum. It could be indices, bonds, economy. It could be anything. They are all plotting price over time, and they're plotting the data. This is just all data, yeah? All these little dots here, these little lines, these little candles are data, all right? Now, this particular one that we're looking at is Euro USD, all right? Which is a derivative product. And when you say that, man, I'm gonna say, "Rah, man's using big words." What does he mean, derivative? So what we mean by derivative, we mean that Euro USD is not a real thing, okay? It's not a real thing. You can't go and buy some Euro USD. Yeah, it doesn't exist. So Euro USD is just a comparison between Euro and United States dollar. The Euro and the United States dollar. What is price doing in comparison? Is Euro stronger than the United States dollar, or is the US dollar stronger than the Euro? Yeah, that's all this market is. It's not a real thing. It's a derivative. Whereas in futures, if I went to futures over here, I could just look at the euro, or I could just look at aluminium. Now that is aluminium. That is what is the price of aluminium over time. But Euro USD isn't that. It's the difference between the euro and the USD, whether one is stronger than the other. That is what it is. Yeah. So therefore, when I look at this product, this item here, I can see, not as an opinion. This is what I like to tell people. This is not my opinion. This is a fact that I can go like this and I can draw some lines here. And the only reason I'm drawing some lines is so that our eyes can see what's going on. Okay. Now I can see here that this Euro USD market, not as my opinion, as a fact, has been falling ever since 2008. Since 2008, the United States dollar has been stronger than the euro. Now, how have I worked that out? I've worked that out because the pair is called EU. E for euro, U for the United States dollar. And if this was a scale, U is evidently heavier than E because the scale will be looking like so, in this direction, i.e. the market is falling in this direction. So when we think about strength so you can remember it in your mind, think of it like a scale. If USD was strong, if the United States dollar was stronger, we can refer that strength like weight. It's heavier than euro. So if U was over here and it was heavier, i.e. stronger than the Euro USD would be going down. And that's what's been happening. Yeah. So we can immediately see, not as an opinion, as a fact, that euro has been losing strength against the United States dollar. The United States dollar has been stronger, making us have this understanding of the markets: lower lows, lower highs, lower lows, lower highs, lower lows ish, lower highs, lower lows, lower highs. We've got this understanding that the market moves in waves, and when we have lower lows and lower highs, that is what we call bearish. That is what we call the market has been falling. And if the market has been falling, the trend, and I wanted to trade in line with the trend, I'd be trying to short this market. Now, ultimately, I'm showing you this on a much, much bigger picture because we have zoomed all the way out to 2006, 2003. Now, the reality is if you're a day trader trying to take trades in and out of a day, it's not that relevant about what happened in 2003. Yeah, because you're not going to be taking a trade that can allow you to stay in a trade based upon 2003 levels. However, this is an understanding of the markets. Now, once you can understand this, all you've got to do is understand how you can zoom in and understand what this exact same thing, and then zoom in again and understand this exact same thing, and then zoom in again and understand the exact same thing. That's it. But what you've got to do when you're zooming in is you've got to put, when I zoom in and I go in one zoom level, I've got to put that analysis within this framework. And then when I zoom in again, I need to put that analysis within that other framework that's within this framework. And the way we explain this is our Russian doll theory. This is the big Russian doll. The big Russian doll is that this is what the market's been doing. It's been falling like so. Okay. The smaller Russian doll is when we say, okay, let's have a look. Let's drop our time frame and zoom in and see what's going on. And then we'll be able to draw some more lines and understand what's been going on our daily time frame. We'll be able to see how the market was, pushing up in this type of energy like so. And then the market has broken structure from this big premium level, this bigger Russian doll here. It's broken structure from up here and looks like it wants to do something else. What is that something else? Well, previously we was making higher highs and higher lows and higher highs. Now this market seems to be making some lower lows. If we look over here on the daily time frame, seems to be making some lower lows, lower highs and lower lows. Now let me give you a saying and give you a way you can understand these markets. The market will do what it has always done forever and ever and ever and ever until it decides to do something else. So therefore, what does that mean? That means that this market has been going bearish, making lower lows and lower highs, and I believe it's going to continue making lower lows and lower highs forever until it decides to do something else. All right. So that means my assumption right now is this market is going to continue making lower lows and lower highs until it does something else. That statement is a correct statement no matter which way you listen, you understand it. Okay. So if we combine that with what we think is happening on the bigger picture, i.e. that we're in a premium. Now let's get to understanding this terminology, premium and discount. This is any market. Remember, this is the financial markets, but this could be a fish market or a trainer market or a whatever market. Okay. And the reality is in a market, it's about premium and discount. Is that thing expensive or is that thing cheap? So if I can see that this market here, up here, this top line is representing expensive and this bottom line is representing cheap, even if, like I said before, we was talking about Apple, which was in the opposite way, is we need to understand from Apple's perspective of what is expensive and what is cheap. Yeah. So when Pearl was making her decisions, she could have maybe delayed her decision a little bit to invest in Apple on the basis she says, I'd like to buy when it's cheap. I don't know when she invested, but for argument's sake, if she wasn't looking at the charts like this, she may have had an opportunity. Someone said to her here in December 2021, to buy Apple, and she bought Apple. Okay, for argument's sake. I don't know if that's the truth. All right, so don't jump down my neck. Yeah, Pearl. All right. So you might have bought here in December 2021. All right. Go on.
No, I invested years ago, so I'm
all right. So let's even go years ago. All right. We'll stay where we are. So maybe she invested in December 2021. Obviously, she invested years ago. She's done very well from Apple. All right. But let's imagine she just invested here. Now, if she understood the chart, she might have said, "Listen, I love Apple. It's a really good thing. I want to invest in it. However, I think I'm going to wait a little bit until we get into a discount." So instead of her investing here and having to watch her profits, her investment go down. So you invested £1,000. Instead of her having to watch her investment go down over here to 750, she could have had a better understanding of premium and discount and said, I'd like to invest when we get around this level. Now, we don't know when. This market could have kept going down. But if that little bit of understanding could have meant that her £1,000 was actually invested down here, and all she's ever seen is her profits grow from 1,000 all the way up in here to 1,500. Yeah, we had a little retracement back down here to 1,200, but still more than her 1,000. And then now she's at 2,500. Opposed to spending 6 months, 9 months, whatever it may have been, a year of her profits just going backwards. Because there are a lot of people that would have seen their investment going backwards here, and they would have done what? They would have cut their losses. Oh my gosh, my £1,000 is 750. Oh, I need that 750. I just need it, and they would have just closed it out. All right, and that is just basically understanding premium. They bought when it was the most expensive it's ever been. You know, at this point here, they bought Apple when it was the most expensive it has ever been. Now, let me ask you a question. In what walk of life are you out here trying to buy things when they're the most expensive that they've ever been? I don't know. I don't know any time. You're just trying to buy things. And then you can buy into a trend because, yeah, something is, you know, picking up value. Yes, that is possible. You know, for whatever reason, you know something everybody else doesn't know, and you do buy when it's the most expensive because you know it's going to keep going up. But more times out of 10, you're not out here trying to buy when it's the most expensive it's ever been. You want to buy when things are cheap. You want to come home and go, bro, I got my PlayStation 5 for just £150, you know? What? What do you mean? It's normally 500. How did you manage that, bro? Now, that's where you want it. That's where you're going to be bragging about. You're not going to be like, I paid £850 for a PlayStation 5. Because your mate's going to say, what? They're only £500. So what do you mean you bought it for $850? Oh yeah, but it's Christmas time and the price has been going up and I just paid $850. You're gonna say you're mad. That's what I was gonna say. It's the same principle in the markets. It's the same principle in any market, not just this market, in any market. All right. So if we go and we look at our Euro USD, we can see our Euro USD price has been falling. So if the price is up here in this premium, this is already giving me a bit of a bias where I'm thinking to myself, maybe what I want to do is I'm interested in selling this market. Now, the issue is I can't just hit sell based upon looking at a chart on the monthly, because if I'm a day trader, I need to understand what's going on right now, this minute, you know, for me to get involved. And as I can see on a smaller range, yeah, on a daily time frame, this market is actually in a discount of this bearish run. It's at the bottom of a range. So therefore, there may be a retracement back up into the premium of this impulse. I've got to understand that that is possible. Now, could this market just accelerate and start dropping to hell? Of course it could. But I have to assume that these markets are moving in waves. They're doing impulse. Yeah. And then they're having some kind of retracement, impulse. And then maybe having some sort of retracement. So that's already coloring my views. I'm thinking to myself right now, someone said to me, Jay, buy right now today. In the back of my mind, I'm thinking a little bit like, I'm kind of buying in the middle of this range. I'm not too sure. The market might push up some more. That's the basics. Whereas if I had this range here and this market now, you know, was on this white line, I'd be saying, yeah, we are kind of in a premium for this range. I couldn't keep pushing up. Of course it could. You don't know everything just because you drew some lines on your chart, but at least you've added a little bit of due diligence, a little bit of understanding that, wait a minute, you'd like to sell in this instance, yeah, in a premium. Yeah, you don't want to sell down here. Like, imagine that you was a shop owner and you've bought a box of jeans. You don't want to start selling the box of jeans at the cheapest that they've ever been. You're not making no money by doing that. You want to sell these box of jeans when they're at a premium. You're better off parking off those box of jeans in the back of the factory in a box and say, yeah, I'm gonna wait until you know, white jeans come back in fashion. Because I'm not gonna make any money selling these white jeans right now. I bought them for £10 a jean. And now people are selling them at, you know, £10.50 a jean or £9 a jean. I don't want to sell them now. I'm not going to make any money. But if for whatever reason white jeans come into fashion and now people are willing to pay £20 a jean, well, now let's break out that box at the back that I bought those jeans for £10 a jean. Now I'm going to make 100% on them if I'm selling them from this premium. And we better hurry up and sell them now before they change their mind. Before people start coming to their senses and don't want to buy white jeans anymore. That's the general principle. So even now when I'm looking at this market here, my concern is that we're a little bit in the middle of a range. Now, does that mean that I can't take a trade and somehow prosper and somehow make £1? Yeah, it doesn't mean that. That's not the case. It just means that if I'm looking at it, and I'm analyzing it, I don't like the fact that we're in the middle of a range, because one side is premium up here, one side is discount, but in the middle is just like the average price. So if you was going to the shop and those trainers were the average price that they normally are, why is there a compelling reason for you to buy them or sell them? No. So therefore, things can go any way. Maybe they go down here, I don't know. Who knows? Maybe they go up here, I don't know. Who knows? Like, there's not a really good compelling reason for either or to happen. So you've got to think to yourself, that's making it a lot more difficult for you to predict what has happened. What's going to happen, sorry. Whereas if they're in a premium, you're like, yep, you know that people are going to be wanting to be taking profits and they're going to be selling off right now. Or if they're in a discount, you're going to be saying, Pearl's going to be saying to herself, listen, Apple is cheap as hell right now. Apple's a good business. Yeah. And therefore, there's a very high probability that the savvy investors or people that have got some money are going to be buying Apple right now. And I want to get involved in that wave when people start to buy. Let's go back to Apple one more time. Let's have a look. Let's have a look at a great time for Apple. We could have been... No, so let's not use Apple. Let's use crude oil. All right, these are our crude oil futures. So this isn't a derivative product. This is actually oil. All right, it's actually crude oil that powers your planes and powers your cars and all those type of things here. Anybody who was savvy enough and had some money to them would have been sitting here, and you know what happened right here? Right here, around these type of levels here, was something that they call COVID-19. And at COVID-19, the government turned around and said, listen, all you people need to stay in your house. Yeah, you're not allowed to go nowhere so that you don't spread this quote unquote disease. Okay. Therefore, who's buying oil? Who's going to be out here going and buying petrol for their planes, for their trains, for their cars? Nobody. Well, why would I be buying fuel if I'm not going anywhere? I can't even go on holiday. I want to go on holiday more than anything. I can't go nowhere. So therefore, the price of oil fell all the way down here to, I don't even know what it is, a barrel. It's falling all the way down here to what's this? Maybe $600-700 a barrel. But if you're like Pearl and you understand that what she understood about Apple, that Apple's a good business, she likes it, people are always talking about it, she's looking at it from a very logical perspective. Well, it's two scenarios here. You either believe that this COVID-19 is the end of the world and there's going to be just roaming around again, and people are going to start traveling. They're going to start using their cars, they're going to start using their planes, they're going to start using their boats, their jets, whatever it may be. If you believe that, at this point in time, you are saying this is in a bloody discount. Let's have a look at if we drew some lines. If we drew some lines, this market is like so. We wouldn't even have had that information. Yeah, we would have had this information. So let's not go by information we don't have. Let's go by information that we do have. Let's rewind these charts all the way back over here and be like, yeah, look, boom. This market, however you want to draw it, if we want to draw it from here, let's just draw it from here. We're going to put this stuff like this. We're going to be saying like, look, boom, this market right here was already at a bit of a discount as this market was dancing around. But for sure, when this happened and the market started to fall to hell, all right, I'm trying to play it forwards over here, you got to be like, wait a minute. If oil only 6 months ago, a year ago, was all the way up here at $5,750 a barrel, surely $600 a barrel is cheap. I mean, you're just thinking to yourself, look, if we could just get back to 2018 prices over here, surely Me buying a barrel of oil right now is cheap. I mean, can't be expensive. If a year ago we was at 5,750, and the savvy investors hit the buy button down here and bought everything they could because they understood that at some point the world will open back up and people will need fuel. And those savvy investors, have a look, watch them. See them? They're looking at their investment and they're thinking to themselves, yeah, their $600 a barrel fuel is now at 2,750. All right, you do the math on the percentage increase. Yeah, and then they've seen it pushing up here, 4,694. Then as we started going, we're in Jamaica, we're in St. Lucia, we're traveling the world because we've been locked down for so long. We thought the world was going to end. They're watching their profits absolutely go to the moon. All right, somebody's having a scribble on my screen, and I can actually find out who. All right, but we're seeing that happening. Okay, and look, that is what you called a great investment. Yeah. You understanding that this company, which is not a company, but in this instance, it's a product, has intrinsic value, and therefore you are trying to buy things that are undervalued. You hear Warren Buffett talk about, he doesn't necessarily try to time the market, but he tries to buy things or companies that are undervalued. Yeah. And that's exactly what people did when they purchased oil all the way down here. They understood it was undervalued because for the last how many years it's been up here. Okay, and this is what we're trying to do even in a forex market. So we're trying to buy when things are undervalued and sell when they're overpriced, overbought. Okay, they call it overbought and oversold. All right. So in this instance here, automatically, this wouldn't be something that I'd be saying was, if I was looking on a bigger time frame and a bigger picture, I wouldn't be like, oh yeah, this is looking great for anything because we're kind of in the middle of a range. Yeah, but on a smaller picture, I could take the view that the market's traded within a range and try and get a small buy from this bottom range or a sell from this top range. I could do. All right, but this wouldn't be my 10 out of 10. My 10 out of 10 would start from me understanding that on a bigger picture, I'm in a premium. Yeah. So, or you'd wait when you hear traders say, I'm waiting. I haven't done anything. I'm just waiting for the markets to do what they need to do. They are waiting patiently, understanding that they have to wait for the right time for them to get in the trade. And the right time for them to get in the trade would be when you understand that those box of jeans that you bought are really, really overbought right now. They're in high demand. And when some things are in high demand, the price goes up. Yeah, and you'd be like, okay, now's the time for me to sell my box and make my profits. So that's when you hear people saying they're waiting. And that's where you hear people say it's about patience in getting in the markets. You see, day traders inherently are impatient because we want to take trades every day. But every day there might not be a great opportunity to take trades. All right, let me zoom down here on this Euro USD. This Euro USD has been making higher highs over smaller structure, higher lows, higher highs, higher lows, higher highs, higher lows. And we're now sitting in the middle of a range near this previous high where we can see the markets were in here. Now the question is, does this market just take liquidity from up here, and start falling down some more? Or does it keep going up? We're not too sure because we're in the middle of a range. Whereas if we was at the edge of a range, or the top of a range, we'd be more safe thinking to ourselves, yeah, our bias is to sell. Look, from the top of this range, our bias is to sell, and then it would have gone like this. Even if we fell asleep on it and there was a little retracement, when we woke up a week later, yeah? So the whole point is that we want to be able to understand what is a good trade from a bad trade. We want to simplify this stuff. We don't need to be looking at everything like it's the most complicated thing known to man, okay? We want to be understanding how can we simplify this journey and our understanding of the markets. And I've just given you the simple breakdown and understanding how you can break down any market. Because let me tell you something for free. The crypto bull run, you'd say, has started again. We know crypto, Bitcoin's nearly at 100K. Okay, it was about $200, $300, $400 off of $100,000 last week. Okay. And there's going to be a lot of altcoins. Remember when the crypto hysteria was happening? Remember, crypto was very new to a lot of people, and it was always a hysteria. People were just phoning you saying, "Yeah, I'm investing in, Dogcoin and Catcoin, and there's Donkey Coin, and I'm just investing in it. And you better buy some, bro. You got to buy some. It's gonna go to the moon." And you didn't have a clue. You're just like, "All right, cool, no problem. How much did you put in?" I put in 100 quid. Okay, cool. I'm gonna put in 100 quid too. And you just bought it. How do you buy it? Yeah, you go on this platform, you register, boom, 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 you put your money in, and you just buy it. You just bought it, hoping for the best. You had no understanding to even look at the chart and be like, I don't know if I should buy it right now, bro, because it's kind of like in a premium, bro. Like maybe I've missed the move. Maybe I'll wait and try and buy at a discount so I can be part of that move. Why do I really want to buy right now when it's kind of done that energy already? Surely there's going to be people like our guy with the box of white jeans that are going to start selling up here, bro. They've done so well. Then maybe you can start look at fundamental reasons of why maybe that it might do good. You might say, okay, well, does that coin have actually any use case? Like, does it have any utility? Does it actually do anything? No, it doesn't do anything, bro. It's just kind of about the hype. It's all about the dog and the coin, and it's all about the coin and the dog. Okay, so if it doesn't do anything, there's no real reason, anything really propping it up to keep it going up, is it? Well, no, but maybe I'm gonna sit this one out, bro. I'm sorry. Yeah, maybe I'm gonna sit this one out now because it's just I can't see it. It's not really mathing the way it needs to math. It's not really making sense. I wish I did get involved in it because it looks like it's doing really well. So, good luck to you. Congratulations to you. But from where I'm standing, doesn't look that great for me to get in now. All right. Okay. I know you guys understand that. All right. So therefore, if I'm saying to you that that's how we trade, all we're trying to do is do that we need to be able to zoom in because now we're looking at a much bigger picture. Okay. And zoom in and do it again and again and again so we can make a good decision. At the moment, this has already lost the mark because we're sitting in the middle of a range. Now I could immediately just turn and be like, nope, not interested in it. I can go through all these, and there's loads of pairs. Don't get twisted. I've only got a handful here, but we can go through all of our Forex pairs, simply looking for ones that first and foremost tick a box of where we are, in a bigger picture. Now we don't necessarily have to do that so much as day traders because we're trying to get in and out of the trade in one day. But it's good for us to know. To say, for example, if I'm looking at this JER 30, which is the DAX, or sometimes the people are going to call it the JER 40. They've added, another 10 pairs. Is we're going to turn around and be able to say, okay, look, where are we in the range? Well, roughly here, we can see that this JER 30 is coming up into a premium. No matter how you draw the range, because someone's going to argue with the way I've drawn it, cool. No matter how you draw the range, whichever way you want to, whichever data points you want to take into factor, like here or whatever data points you want to take into factor, we're at the top of this range. Because remember, these lines that we're drawing are just general lines. They're just general ways for us to understand the markets for our eyes. It's not to the millimeter. I'm just drawing this on my screen. And this is just based upon candles that are coming from Oanda. Candles that are coming from a different broker might even be ever so slightly different. But I can see that this market is very expensive at the moment. Yeah, the DAX is the most expensive it's been. This is one of the most expensive months, because I'm on the monthly, that the DAX has ever been in its history. And does that mean that it's going to come down all the way down to it? Doesn't mean that. It just means exactly what I've said. It's very expensive right now. Okay, so I've got that in the back of my brain, thinking to myself, okay, we're in a very expensive market. Okay, now I combine that with, okay, so what is it doing on a smaller time frame? Is it giving me any hints or excuses of what the market may want to do? Well, the first excuse that I need to see is that the structure, and the structure is what we spoke about with these little dots, these higher highs and these higher lows. Are any of the structure being broken? Yeah, because that is, it's like you're building a house. Yeah, this is, the rooms are burnt down, but how is the structure? If the structure is still fine, okay, that's not too bad. We don't have to knock it all down and start again. But if the structure starts to give way, maybe this house is going to start tumbling down. It's going to start crumbling. So when we're looking at this, I'm looking at it from a bigger picture, and you see me put those green dots in, which is probably in the best color. But has this market broken this structure yet? Well, no. We've had some wicks over here, but nothing's closed down here, and a closure is like, it's saying it with its chest. It's like it's saying, I'm closing down here, I am breaking structure. Wicking down is a bit like a little coward, like he put his toe in and like, ran back. He came and looked over here and he saw a pair of big guys running at him to knock him out, and he ran back in the opposite direction. So nothing's closed below this structure. Yeah, and that would be a first significant point for me to be able to understand breaks of structure. Guys, I've just realized the time. It's 20 to 10. I hope that my slow, long breakdown has given you some additional insight into understanding market structure to the point where you want to learn more, you want to know more, you want to better understand, what's going on. And like I said to you, if you want to test yourself, explain it to somebody. Explain it to somebody who doesn't know. Open up a chart and explain to them what's going on in these markets. When somebody says to you, what do you think? Do you think I should buy Tesla right now? Open up a chart and give them your opinion. Yeah, not based upon, just nonsense, based upon the sense that give them your opinion. Say, listen, you can buy it if you want, but if I was you, it's probably better if you buy it around this price, or sell it around this price, or buy it around this. Like, you're able to do that. So like I said to you, the best way to learn is to teach. It's a way to test yourself, because you've been here, you've been listening to me ranting away. Question whether anything's been retained. Yeah, like when your kid's been in school all day long, and then you ask him, okay, so what is 2 times 2? And he says 15. At that point, that's the question that needs to be asked. Doesn't matter that he's been in the class all day long and they've been telling him it's 4. Does he or do you know it's 4? Yeah, and you will very quickly realize when you're explaining it where your holes are, what you don't understand. You're like, yeah, this is happening here. I don't really know why that's happening, but yeah. Then you can come back to the family and you can ask. Yeah, I'm going to leave it there because of the time. I didn't realize the time. And there you go, my phones are ringing. I want you guys to have an absolutely fantastic Friday. I know we're getting to the Christmas seasons. Maybe Christmas trees are going up, lights are going up, okay? But understand, this is a marathon, not a sprint. Doesn't matter where you are in life, it matters where you are going, okay? I'm a very, very keen believer of this. P. Diddy was at the top! Where is he going is the better question that needs to be answered. Yeah, or it's the better thing to keep an eye on. All right. So the fact of where you are in life doesn't matter too much. It's where you're going. And if you're focusing on good things, doing good things, expanding your brain, investing in the right places, having a good, clean heart, making good relationships, the likelihood is you are going in the right direction. If you're eating bad, you're not going to the gym, you're swamping your brain with nonsense, you're having bad relationships. The likelihood is that in the future, you're not going in the right direction. All right. So just doesn't matter where you're coming from. It matters where you're going. Guys, I want you